Hey guys, Ken Boyd with the Accounting Accidentally website. This article is called What a Pentagon Scandal Teaches Us About Accounting Changes. And what I want to start off with is a discussion of accounting adjustments. And accounting adjustments can be a real red flag for an auditor. Now, if a company has an experienced audit staff and strong internal controls, they're going to get most things right. Each accounting entry is going to be supported by documents, supporting documents, invoices, receipts, and purchase orders. They're going to reconcile accounts in a timely manner. And what all this means is that the financial statements are accurate, and that means that all the stakeholders, investors, creditors, etc., have confidence in the financial statements. And there are several types of adjustments, four specifically, that we make every month and year. And we make these adjustments because we use accrual accounting, which matches revenue with expenses incurred to produce the revenue. Accrual accounting does not post income and expenses based on cash inflows and outflows, and it's a more accurate way to calculate business profit. It is not tied to cash movement. So the first is converting an asset to an expense. Assets are purchased to generate revenue. If you're a plumber driving a truck and you're driving that truck around to create revenue, the truck's going to depreciate. And what happens is the book value, the true value of the truck, is the original cost less accumulated depreciation, and the depreciation expense will eventually adjust the value of the asset to zero. So if you can imagine this cycle, you purchase an asset, the asset's used to create revenue, you depreciate the asset over its useful life, and then you collect cash from the revenue and buy another asset. That's the cycle. Converting liabilities to revenue. Think about a customer deposit. If a customer pays a deposit, the balance cannot be posted to revenue until you deliver a product or service. When the deposit's received, you increase cash and post a credit to customer deposits, which is a liability. And then when you provide the service, you reclassify from customer deposits to liability to revenue. We accrue for unpaid expenses. The easiest example is payroll. If you owe payroll at the end of December, you post an accrual or an expense to recognize that expense in December when the payroll was earned. And then in January, when you pay it, you remove the accrual. And finally, accruing uncollected revenue. If you're owed $50 in interest by your bank and they haven't paid it as of the end of a month or year, you increase accounts receivable and you increase or credit interest income. Now, these are all adjustments these are all entries that are posted every month and year. However, if there are adjustments required after the books are closed, after the period ends, that's a problem. And if you don't make the payroll accrual, for example, your accounting record is going to be incorrect. This graphic shows the four types of accruals that I explained above. So I about fell out of my chair when I read in 2020 about a Pentagon audit. And as you'll see in the middle of the page here, over 500,000 adjustments were required to fiscal 17 and 18, according to the Government Accountability Office. How does that happen? Well, there's a couple things that should have happened and didn't. And you can apply those to your own business. And the first is source documents. Everything's supported by a source document. Every purchase has a purchase order, for example, and it has to be approved. So you have documents. The other important thing is that you do not fall behind. You reconcile your bank statement on a monthly basis quickly within a few days at the end of the month. Cash account is typically where most of your transactions post, and that's where the increased risk of fraud is. So make sure you reconcile your bank account, follow accounting principles so you have an apples to apples comparison between periods. Those are the important things to do to keep your records in order. So what have we learned? Every business posts accounting entries to comply with the accrual method, and that's normal. Adjustments required for a prior period, including those identified by an auditor, are examples of poor internal controls. So that's the discussion on accounting adjustments. And remember, you can go to conference room, the address is right here, and find our community where I talk about accounting, personal finance, and entrepreneur topics. You'll find lots of content here, and you can receive it directly if you're a member of Conference Room. Thanks very much, and we'll see you next time.